All right. Good morning. It is Monday, September 11th, 2023. September 11th. It's, 22 years ago. Doesn't feel that long ago. Does not feel that long ago. But we hope you had a nice weekend. Beautiful morning out there this morning. I don't know, maybe it's just because I got to the office really early, but it feels like fall might not be far away. Speaking of fall reviews start today, so we are really excited about that. We feel very prepared and excited to share updates and deliver value, continue to deliver value for the people that we serve. So just quickly, and I hope it's the last time I say anything about the TD Ameritrade Schwab merger. All right. One thing to double check, if that does apply to you, we did notice in some cases, and really I think it's because, again, they announced this merger like close to 3 years ago. So it's been, they've been pulling data, right, from Ameritrade to Schwab over the last 3 years. But we did notice in some cases that there was some old information, right? So probably information they started gathering from Ameritrade, 2 to 3 years ago, where some of that obsolete and outdated personal information came over to Schwab. Okay, so just double check, because we came across a couple cases where like it might be an old address, maybe an old home you were in, where it might be listed as like a secondary address, or like an old landline, a phone number you don't use anymore might be listed as a secondary phone number. All right, so just when you sign into Schwab for the first time, if you haven't already, again, if this applies to you, just double check your information is correct. All right, on our end, most of the time it's pretty easy for us to update, and we've been trying to scrub the list a little bit as well from what they brought over. So just something to take a peek at. Okay, last week equity markets down a touch, better than expected manufacturing data. On that, as many of you know, I can become quite a nerd when it comes to the yield curve, right? So the yield curve in the United States, kind of interestingly, kind of quietly behind the scenes, like the yield curve has been starting to steepen a little bit. Okay. Now, important to note that the yield curve, at least the U.S. 10s and 2s, like very inverted still. Okay, so. And what inverted means, it means when short-term rates are higher than longer-term rates, right? So it's downward sloping. That means inverted. But in recent weeks, you've seen maturities further out, which is more dependent on economic data, start to increase. Okay, now you still have like the short end of the curve, the front end, quite elevated, right? And that is because the Fed is not expected to cut rates anytime soon, but it's just kind of interesting to see the curve further out start to come up a touch, right? And so you call that a steepening of the curve. Now, for it to be upward sloping again, we would probably need to see the Fed cut rates, right? So the Fed largely determines the front end of the curve. And so you can imagine, right, if the front end of the curve starts coming down, well, it's going to make it a lot easier for an upward sloping yield curve. If I had to guess, that probably isn't happening until the latter half of 2024. But a curve that is steepening, that is encouraging long term, I guess, is why I bring that up. So and really it's going to be very, very dependent on, can inflation remain tame going forward? And what will the employment picture look like in the quarters ahead? All right. So this week we get CPI, right? So Consumer Price Index for the month of August. So obviously a really important inflation reading. We also see retail sales. All right. So we get some retail sales data, which again, the consumer makes up 70%, 70 of GDP. So retail sales is a big indicator how the consumer is doing. So questions, comments, concerns, please don't hesitate to reach out. And we hope you have a wonderful week. Thanks.